A simple guide to investing in turnaround stocks. How to successfully invest in stocks of turnaround companies. 2019 by Boris Timm. Narrated by Nikki Delgado. Chapter 1. Investments. Why invest in stocks? Stocks are considered to be a good investment opportunity for several reasons. The key to remember is that stocks are not typically a fast turnaround for earning money. If you have several years to invest and wait for the return, stocks can be a good investment choice for you. Stocks typically have a higher rate of return on the investment over time than other opportunities, such as real estate or bonds. There are several good benefits to investing in stocks for the future, whether the goal is to have college tuition or retirement money when the time comes. Benefits to stock investments include higher rates of return over time. Stocks can outperform other investments, such as CDs or real estate. Taxes. If the stocks are held in the investment for over a year, the profits upon selling are only taxed 15%, which is the long-term capital gains tax rate. This rate is lower than the standard rate of taxing. Diversification. Investing in stocks can be part of a diversified portfolio. The investment funds can be divided among several solid stocks, such as blue-chip stocks and the like. By keeping a diversified portfolio, the investor minimizes the risks. Diversification helps keep the portfolio stable even as stocks go up and down. If stocks are not an investment method that appeals, there are many other options that are good options but might not have the solid rate of return or the lower taxes upon cashing in. Those who wish to keep their investments liquid and accessible might opt for savings accounts or online savings accounts where the interest rates are good, yet the money is accessible without penalty if it were to be needed. Stocks can be sold at various times to liquidate funds. The penalties or lower return rates subject to the particular circumstance and arrangements of the stock purchase agreement. Investments are part of a solid financial plan for the future. They are a great way to put aside money that will grow to be accessed in the future. These are funds that can be used for college tuitions, wedding expenses, or retirement income or supplement. While there are many people who would prefer to simply put cash into a savings account, investments done carefully and knowledgeably are often worth the effort, as the returns can be substantial. Some research and talking with experienced investors can lead new investors to the best stocks in which to invest. For more information on investing in investment opportunities, usually or normally not found in the marketplace. Basic approach to stocks. In this chapter, I'm going to offer a few thoughts on what I believe helps me to be successful and a few examples of what can and may go wrong. As ever, I hope that this isn't below your level of either confidence or competence, as I don't wish to insult. However, I have found that there seem to be far more people that want to understand finance a little better than there are people who can lecture on the subject. Firstly, to an example. Back in the late 90s, I joined an investment club in the UK. I knew a couple of the members from a local health club I was a member at. Knowing that I was A, keenly interested in investment, and B, more knowledgeable than most of them, I was invited along. Suffice to say that on the first evening, I realised that I had been invited along to do all the work. I enjoyed the work, so that didn't actually bother me. I also could purchase some additional investment tools for the club, which I couldn't justify for myself. The main work of analysis was carried out by myself and another member who is a long-term friend and no mug in the world of shares and investment himself. We were using as our template a theory offered by Jim Slater, which centred around price-earnings growth ratios. In short, it was highly successful. At the end of the first year, we were up by around 80%. Admittedly, this was during the tech boom bull, and any idiot could get 30% PA without trouble or effort, but still, we were very impressed. The second year started well too, and within 6 months of year 2, our small company growth share portfolio, the only portfolio, was up comfortably over 100%. Nice work if you can get it. For those of you that haven't been a member of an investment club and don't know, they are a democracy.
Sample complete. Ready to continue?